Welcome to F.A.C.E, Larry.
Dale, good morning. Thank you.
Very nice to meet you.
You too. You too. It's been a long time coming. I really appreciate the opportunity.
Oh, yeah, I'm glad that we finally were able to do it. Providence, huh?
For
So,
sure.
anyway, Larry, you can share your screen. There's a drop-down menu if you hover your mouse around it, and you'll see a green box that says share.
Share. Okay.
You click that and then choose your screen, and we'll be able to see your setup. And you see it there anywhere?
I do see it. Yeah, I'm just getting into my chart screen. So let
Okay.
me go back to yours. Bear with me for a second. I had you and then I lost you for a second.
Okay.
Let's see.
Here
All
it
right, so
comes.
share screen. So now you're on my screen, right?
Right. We got the CNBC page up, and now
I
stock
see
charts
stock
is up.
charts. Okay. All right, at least now I know how to do that.
All right, beautiful. So, Larry, I went to your website, and some real nice calls you've made, and you came up through kind of like the conventional way of, major wirehouse is what I used to call them when in the prehistoric age, and decided to just branch out on your own and start your own business. And wondering what was the major motivation after being at firms like Merrill and Smith Barney for striking out on your own? Was it the model? I was a broker myself. I had my own IB, and in that business, there is an inherent conflict of interest that doesn't exist anymore now that people could trade commission free. But we were compensated based upon commissions,
Sure.
and as I remember a commercial they used to run on CNBC where you'd have a broker at a bank of phones with a paper bag over his head, and every time the phone would ring, Larry, he'd
Right.
pick it up and go, "Sounds good, let's do it. Sounds good." Everything sounded good because it meant another round turn. So, what was it that drove you to, strike out on your own? Did you want to become are you a registered investment advisor, or you just wanted to step away from the regulated type of business?
Dale, that's a good question. And what I think it is, it came down to a couple of things. When I became a broker, so I took my test back in '99. And when I became a broker, I was always fascinated with the markets, but I thought that it was going to be a lot more on the trading side and on the market side. And what I found out quickly, it was a lot more on the, sometimes the client hand-holding side or the psychological side. And I'd have a client with $1 million in CDs and munis. And when rates would move, they couldn't figure out why their net asset value fluctuated. And I found that, where I was in West Palm Beach. And I found that the reason that I got into the business wasn't exactly what I was doing in the business. I thought it was a great business. I really enjoyed dealing with the clients, but I wanted to get more involved in the actual technical trading side than what I found from
How
being
do you
just
like cold calling?
Oh, it was great. I could
Huh?
knock out 500 phone calls in a day.
You animal, Larry. All
They
right.
had
So,
in a phone bank at Merrill Lynch. There was about 25 of us in what they called the bullpen, and I
yeah,
would just start at 7:30 and just go through the day.
I remember. Yeah.
Yeah, it was fun. It was good times.
Yeah, you had camaraderie and everything, and it was like you land a few accounts, and I'll tell you my favorite episode. And if you've never seen it, and anyone listening to us right now, go to YouTube and pull up the taxi episode where Louis De Palma goes to become a stockbroker.
Oh, that's
Okay,
great.
yeah, any stockbroker, anyone who's been in the business, you have to watch that. All right, so let's get serious. Looking at your NASDAQ chart and talking about Sirius, I've been around for a while. I was already an old timer when you started, Larry. So, um, you started in 99, so you came in right around the dot-com bubble, and then you saw the Great Recession. Have you ever seen a decline of this magnitude? I think you had to be around in 29 to see something happen so fast, or at least 87. So were there any things, I noticed on your website that you got out of all stocks at S&P 3200, you went to cash. What was it that told you at 3200, even though there was almost, another what, 1%, I mean 8% or so to 3390? What told you that it was time to be raising cash? Was it fundamentals like valuations or something technical?
No, it was all technicals, and what I do is I stick just to the chart. So there was a couple things, and I was pretty long, so I had a lot of long exposure up in here. But what happened was, and this is something that I went over on the website, so 3214 was a key level that I had been looking at. And what happened is when, and I have this on a blog on my website, but when the price broke down below the 50-day, this was the first time, as you can see on the screen, that it broke the 50-day going back to October.
Yeah.
Second thing was 3214 had held 2 times, and then that broke pretty quickly. And then once we broke down below 3200, what I did was I shifted the focus on my website and on the Twitter feed to a raising cash mode. And partially what happened is I just had a bunch of stops. I had pretty much no stops go off anywhere in here. And then out of the blue, I just had a cluster of stops start to go off right away. So really it was 3 things. It was the break below the 50-day, the break below 3214, which is held twice. And then once we lost 3200, I just decided to go into, let my stops get hit, go into a raising cash mode.
What was the execution on those stops, Larry, during, at times air pockets in the market? Were fills pretty good on your stop losses, sell stops?
There was a couple that had gapped. There was a little bit, obviously, of a gap in here, but for the most part, it wasn't too bad.
Okay. All right. So here we are at 2200. A lot of people would say, we've discounted a lot. What's your view with what happened? I think, and tell me what you think, that as bad as it was in the stock market, that what happened in some of the debt markets is even more troubling, especially LQD, which was investment grade.
Sure.
That we have a credit crisis going, regardless of what kind of recovery we get or bear market rally. What are you doing down here? What are your, what's the Blue Chip Daily saying about here? Just sit in cash? Are you deploying it into precious metals, or you just think that cash is king and you just sit on it down here? You're selectively buying.
I started to put some money to work. So last Wednesday, I started to put some money to work in large cap tech, and that, some of that's a little bit underwater, not too bad right now. Gold is a top idea. So my 2 best ideas right now, well, actually there's a couple. So, and as you can see, I'm much more focused on the NASDAQ than I am on the S&P. So the NASDAQ has showed relative strength. If we take a look at,
I noticed that yesterday too.
So the NASDAQ is still holding above the June low and well above the 2018 low. And the S&P, and this is something I put online, the S&P has a lot of problem industries.
Yeah, interesting.
Lines, hotels, casinos, I think cruise lines, I think a lot of these industries that have been wrecked do have a lot of fundamental issues. Like we took a look at Wynn last week, and I think Wynn's debt to equity, I mean, the chart's a mess, but their debt to equity is something like 6-to-1. And I think that these companies that are loaded up in debt and they've got no customers, I think that could be an issue. So my focus has been on the large cap and the mega cap tech and the high relative strength names. We had a buy rating on Zoom at 107, and that took off pretty well. So I've just basically been focused on the higher relative strength charts and the names that haven't broken down.
Okay, so was reading and noticed that the Russell did not make a new low with the S&P yesterday, and the Russell was really led it, hadn't made a new high for a long time. Any comment on, mainly U.S. companies, mainly domestic, not multinationals, and really this was probably the worst performer unless you go to individual issues like Tesla, etc. Any view on Russell in here? A lot of
I
gaps.
don't, I don't have any interest there. So
Okay.
basically, what I focus on and what I do is a little bit different. So sometimes people will look at a chart and try to figure out, if I look at this chart, is it going to go up or not from here? And I don't do that. So what I do is I've got a process, and when I look at a chart, I just ask myself, does the chart or this stock fit into my process? So if it does, then I focus it on. But the Russell, a lot of these industries, so like the small caps, the airlines, the casinos, what my take is on those is they could be very, very high reward, multi-baggers like in these airlines or these casinos, or they could have another 50% down. So I'm going to steer clear. Really large cap tech is where I'm looking at right now.
Okay. I believe I read on your site here that the kind of technical work you do is more reactive than predictive. Did I read that correctly?
Exactly.
Okay, so why don't you explain to the audience that way you're not predicting the action, the action is happening and you react to perhaps it gets to an important zone rather than saying, well, it's here, so I'm looking for this.
Right. So what happens is, so let's take a look at AMD, because this is one of the charts that I highlighted over the past couple of days. So this is one of the few stocks in any group that hasn't closed below the 200-day moving average. So if I were looking to take a position here, and I know that the reaction low is, let's call it 36.75. If I take a position here and I put my stop, let's call it 35.50, I'm not looking at any of this and saying, well, based on a chart pattern or whatever, that it should go higher. I can just look at this chart, measure the risk and reward, and say that if the low is in, and I have no idea, but if the low is in, then AMD shouldn't come down to 35.50. And the fact that it's held this 200-day moving average when pretty much everything else has been crushed tells me this is a higher probability trade.
Because it has relative strength compared to its peers.
Exactly.
Okay.
Yeah, I mean, because everything, I mean, Apple, they took Apple apart the other day. But AMD is one of the few. AMD, DocuSign, Zoom, Teladoc, those are just a couple names, a few that haven't closed below the 200-day when everything else has been pretty weak.
Okay. I see that you write for See It Market. I know those guys. I've interviewed quite a few of them.
Sure.
And that you have a blog on Bitcoin. So it's interesting for, well, it's not that unusual, but interesting that you follow crypto. Maybe you could give us, your view on what you see happening. A lot of people thought it would be kind of a hedge for what we saw just happened, but it got caught up in the liquidity squeeze too. But it's bounced back. Okay, so you trade GBTC on that. Okay.
Yeah, I trade. So, and let me pull up the Bitcoin chart. So I'm what you could call a part-time crypto follower, and basically what happens is once it gets over the 200-day moving average, is when I start to pay attention to it. And then other than that, I kind of don't follow it too much. So I was fortunate enough to get most of this move. And then when I wrote my blog, it had just gone over the 200-day, and it started to work pretty well. I was in GBTC, and then I eventually got stopped out of that position. So this is a tough market. Technically, if I just look at the chart, until it gets over, let's call it, where's it at 67.50?
8,000.
8,000, 8,500, because what I want to do. A lot of
confluence of your MAs all converge there. I like when that happens. Convergence, confluence of things that you watch.
And there's a lot that's going on in here that shorter term traders, I'm sure, can dial into it. But basically what I just look to do is I just look to catch what the major move is. I thought this could be the start of a major move, and then when it started to unwind, I just stepped aside.
Okay, and only played the long side, not the short side.
In the cryptos, yeah, and for the most part, I don't do too much on the short side anymore. My last really good short trade was I was short the NASDAQ back in 2018 at the end, from November through December.
Through what? ETFs like SQQQ?
Just triple Q.
Okay.
Yeah, I was short triple Q. I was short a little bit of USO, and I was short NVIDIA. But what I found is trading on the short side, it's a different dynamic. And then what happens is I had a pretty good triple Q trade, but then once the market started to rally coming out of the low, I did have some SPY, but I took another 2 short triple Q trades that got stopped out on the way back up. And what I've decided to do is just focus more on the long side, and it gives me a lot less to do, for mental capacity. Because what happens is so right now, a lot of people have a short bias. And what happens is whenever the final move comes to the upside, they're probably going to short that a couple times. And so I'm focused mostly on the long side. So cash, if that doesn't work, I had a pretty good position in TLT. So when the market started to come undone, I was long a pretty good piece of TLT. So I just focus more on the long side.
All right, let's go to TLT because you couldn't even hide in there after the blow-off move to 180.
And they got me on that one. That took me out. So I caught this move.
Yeah.
I was lucky enough to sell it near the high, but then I bought into it too soon. Yeah. And the volatility just took me out.
Yeah. But how now, brown cow, with the Fed coming in and that type of break? Is this a failing rally, or is there another shot for another new high? This is a tough call. Are you back long TLT again?
I've got no exposure there right now.
Okay, I wouldn't know what to do either. It almost looks like it could make a new high.
I can't get a clean read, and what happens is when the volatility starts to do this, I just kind of step to the side, because what happens is I use hard stops, and in this type of volatility, even I could be right on the position, but in the short term get stopped out.
Right,
so
called right the market, wrong the trade.
Yeah, GLD is one of my better ideas right here. So GLD, and this is just the ETFs. I'm going to pull up the cash chart, but 1400 to 1460 is key longer term support. So what my view has been is over 1400, and this was resistance for about 6 years, but over 1400, the longer term trend is intact. 1460 is a little bit of shorter term. So fundamentally, and I don't look at fundamentals too much, but QE Unlimited should be good for precious metals. And the chart itself in gold and GLD, it's got a rising 200-day moving average. It held in this level here. So over 1400 is bullish on gold.
Okay, yeah. Easier to see now than when it was trading 1400. Although here we are at 1620. It doesn't look like you use fibs, but we have to trace a little bit more. 60.8.
Yeah, because if you look going back to the monthly, so going back to 2013, you can see it couldn't break over 1400. And then it finally did. So if I just use a pure price level, as long as it's over 1400, longer term it's bullish. And then if it breaks below that, then I want to be out.
Yeah. Okay. It sounds. You also write about the miners, and were you surprised when GDX traded 16 with the market crash?
Very much so. And this is another market. I'm not in this right now, just because I can't have any type of stop in there. Yeah. So I'm not sure what happened.
They're taking markets away from us, Larry. I mean, we all were praying for more volatility. Be careful what you ask for. And now some of these markets, this kind of violent and magnitude of ranges expanding exponentially makes it almost a no touch for me in many of these markets now.
It really does. It really does, especially.
And you really need a lot of discipline to not trade, don't you?
You do. You do.
How do you overcome FOMO?
It's taken a long time. It's really taken a long time. I just got tired of losing money.
That's usually a good way to get over it.
Yeah. Usually when I would FOMO, I break the rules and then I'd lose money. And then I got to the point where I just got tired of losing money. So now I just kind of sit, but there are some things. So like when it's more volatility like this, I look more at the ETFs. So when I take a look at something like, say, Triple Q or XLK, which is in the tech sector, these are still volatile, but what I do is when the volatility picks up, I just run a wider stop and a smaller position so that
Smart.
because I want to have my exposure. So I've got some exposure in XLK right now. So I want to have my exposure, and then if things start to work on the upside, I can always start to put some money in. I just don't want to get caught up, in any of this. So I started to buy some XLK last week about 74. Had a little bit of a drawdown, but I set my stop. It was a 15% stop. So basically what that says is that I don't have to get the next 5 or 10% of the move right because of the higher volatility, but I want to get the next 15% plus right. So by having my stop down there, it gives me enough room to, if it starts to work, I'll add some money.
Okay. It looks like there's some confluence up around 83.
Yeah.
An important low and so forth. All right, Larry. Well, you sound like you've been through the school of adversity, and
Yes.
you've learned to become disciplined, and it's okay to do nothing. And you sound like you know about risk management and everything. So for people that are here right now and people that see the video later on, why don't you show them your website and the best way to get in touch with you?
Great. I appreciate that. So we'll go, it's bluechipdaily.com. And then they can see, just to give you an idea. So what I do is I share my recent best ideas. So I've got a premium Twitter feed. And then what I do is I'll post a sample of some of the trades, screenshots from there. And then the best way to reach me, there's a contact link where they can go right on. I've got a pretty interesting blog page where I post pretty heavy as far as technical trading and the concepts that I use. And then on Twitter, and I'm sure you'll have that, it's at LMT978.
Okay. Well, I really enjoyed meeting you. I wish you, not just financial success, but health for you and your loved ones, that you remain untouched, and that, you continue to follow your passion, and that great ideas continue to flow to you, Larry. And like it or not, you're now my trading warrior brother. You've passed the walking on hot coals test by being interviewed with me.
Dale, that's great. I've got to tell you, I really appreciate the opportunity. And the same thing to you. These have been trying times. We're all in the house together and all that, and we're trying to, capitalize on things, a lot more family time. But, the best to you, stay safe, and let's look forward to some big days ahead.
Great. Okay. Well, great meeting you. And really, I hope that you stay green while, that these quiet times are actually give us a little bit more time to think about macro things besides our trading. So continued success, Larry. Really was a pleasure meeting you.
Dale,
Thank you
too.
for your time today, buddy.
Great. Thank you very much.
Okay, so that's a wrap for us, everyone, here on Follow Through Tuesday. Good hunting and the rest of the day, and we'll see everyone tomorrow. Remember, don't just count your gains or your Krugerrands or your mining shares, count your blessings. Again, my prayer for all my friends is that your loved ones remain untouched. And we'll see everyone tomorrow. Adios.